GM, and welcome to the Modern Market. This is our daily show running from Monday to Friday at 7 a.m. Eastern Time, where we talk all things about the crypto market, the NFT market, the meme coin market, and for me, seeing Sammy before the show has started, the question whether to wear or not to wear sunglasses during a Friday stream. Nothing that we say here, whether you're listening to us on X or on YouTube or watch the live stream on X, is financial advice. With that out of the way, Sammy, we are hosting the show together today. How are you doing? How was your night going to the concert yesterday?
Well, my voice is a little bit raw because I was screaming along to The Killers, Mr. Brightside. Had a few drinks, so yeah, a little bit worse for wear. But I'm here, ready to chat about the market and get stuck into it. How was your evening?
Pretty good, pretty good. Actually, I wanted to get back a bit into gaming yesterday. Like I had the whole day to myself. I'll have most of the weekend basically to myself as I don't have any kind of plans. And I was wondering, do I want to get into an RPG? Do I want to get into Baldur's Gate 3 or something, something the like? But then I ended up like watching game reviews. Then from game reviews, I went to watch videos for or reviews for a new OLED TV, and basically spent the whole afternoon watching reviews instead of actually enjoying myself and playing a game.
I've thought about this, like, because there's a batch of people that enjoy watching players play games, and there's also the players themselves. So I've always wondered about that because I think Twitch exploded in 2013, 2014. And I think people got to the point where they could actually watch players play optimally through a game. And I think that became more of an entertainment than the actual game itself, which I find super interesting. And I wonder if crypto games will take off as well, where you have content creators playing the game and then obviously people watching it more than they actually end up playing it.
I think that's something that AI will change. Basically, will be able to change the role of the gamer, right? If you have an RPG that continues playing and your character continues doing stuff while you are on the Modern Market show, going out for the concert, whatever you're doing, and then you come back after a day, after a couple of days, after a holiday, and then you get to download what your character has been doing based on how you trained his AI and based on the decisions that you took before. You become more like of the manager in this interactive movie. That's a game. I don't know. I quite like that idea.
I mean, it would take off because you had Football Manager back in the day, which was huge. So you have like people that would effectively do that, set their teams, and you just end up, yeah, it's just more of a strategy game as opposed to an RPG or like an actual lifelike game. So yeah, it would definitely take off. But in the comments, you got Meta Kryptonian asking, why aren't you going to be playing Cambria with us?
Because I do play Camera and I do the duels, but there's not the full RuneScape vibe there yet. So obviously, apart from the playtests, the Gold Rush playtests, I can't do that full time. But talking about Cambria, old school RuneScape works perfect. Like, I have the iPhone and I have the Galaxy Fold, the foldable phone. And actually, old school RuneScape on the Fold looks pretty sick, like filling up the screen nicely and having this portable way to play it is pretty cool.
I think with RuneScape, it's one of those games that you play on and off for about 20 or 30 years. Like you never truly quit. They've got that nostalgia. They've got you hooked. You're always going to come back. And I wonder if some of these crypto games will eventually do the same.
Yeah, no, I think that. I also see Tiro in the comments saying, "Been there yet." I really have a hard time seeing the difference in a $600 TV versus the 3K one. Yeah, but I don't know. I'm attracted to the pro things. iPhone needs to be Pro Max. The Rodecaster has to have the Pro tag to it. I'm definitely the number one marketing victim. I mean, at the end of the day, we talked about it on the show. I have a $400 AI toothbrush, so I am definitely.
I am as well. I just spent $1,000 on a Sage coffee machine, but it was Sage Coffee Pro as opposed to the Express. I was like, I had to get that.
Yeah, I think that would be the upgrade for the Modern Market if we ever want to do something with the show's name, just Modern Market Pro, so people know we're serious. Anyhow, with that out of the way, let's get into the news. We don't have the snapshot today to pin up top. We do have the news and everything prepared, and quite a lot to actually unpack and discuss for a Friday. Let me get my screen shared for those of you watching us on video. Starting off with the crypto price action, surprisingly, after the pretty great CPI numbers that came out yesterday with inflation being lower than expected. We have BTC at 57K, down 2.2%, ETH down 2.5%, back to $3,060. Solana down even more to $135, which means it's down a bit more than 5%. In terms of the main headlines, found a pretty interesting study that came out that speaks to the global cryptocurrency trading volume that's expected to grow to 108 trillion in 2024. Little typo there on my end, and also sees a surge of 90% since 2022. Looked at more than 130 countries, and I feel like it has quite some interesting takeaways to digest and go through. Germany BTC holdings are down to 6.1K, means they're almost done dumping. And as the final piece of news, staked ETH is close to its all-time high, more than 27% of ETH staked, as the ETF approval appears to get closer and closer. Also looking on Polymarket, I think there's currently a 88% chance, looking at the bets for the ETF to be approved over the next 12-ish days. In terms of notable NFT sales, we saw pretty cool Rare Pepe Series 1, Card 1, so the OG Rare Pepe card, the Nakamoto one, selling for 34 ETH, currently listing at 74 ETH. So a nice six-figure sale on a Rare Pepe. Haven't talked about these in quite a while. Pretty clean CryptoPunk, selling close to floor at 29 ETH, and a Rare Alien Milady going for 16.69 ETH or $51,000. Moving over to Mintify, our NFT trading platform and marketplace partner, there's quite some interesting things today to look at. One of which is Mochaverse. We basically spent yesterday's entire show talking about the Animoca business model, talking about the consulting and advisory that they're doing, and obviously also about the price action. And I think we've seen that dump at TGE that was bought up pretty quickly, and now the PFPs are back to a 1.875 floor. Also in conjunction with that, we had, we had Yatsu from Animoca himself sweeping another 11 Mochaverse PFPs for 20 ETH and bringing his total collection up to 88 Mochas that he is holding. And in terms of the other PFPs, Bored Apes are down a touch, 9.7 ETH floor. Pudgy Penguins basically stable at a 10.8 ETH floor. Doodles, which we talked about over the last couple of days and which have seen a strong pump, have not given a lot of that back. They're still sitting at a 1.9 ETH floor, which means they're only down 1.3%. And both Milady and Remilius are up 5% and 2% respectively. Is there anything else in the NFT market, in the JPEG market, standing out to you, Sammy?
So we had Bear Snake on the show yesterday, who's running Forgotten Runes, and they've recently bridged to Ronin, and as you can see, it's obviously bullish news. Like, people are picking this up probably to start playing the game over there once it goes live. So yeah, I think this one struck me, and this is like an OG project from 2021. I can't remember. Do you remember what price they hit in terms of floor price? I feel like it was a pretty high floor price back in the day, probably similar to like the likes of EtherOrcs, which hit about 4 ETH at the time. But there was definitely a gaming meta where, for instance, the NFTs would be dropped back in 2021, and then the roadmap would include the game being developed over time. And then we kind of hit that bear market, and those games that had that funding and development back then have kind of coming to market now. And Ronin seems to be a good location for a lot of these games to go. I think Pixels wasn't originally on Ronin, and they moved across. I think we've got the CyberKong stuff has moved to Ronin. So there's actually a lot of activity, and I think even the Axie stuff on Ronin is still being played. Not quite what it used to be, but there's still a lot of activity there that I've definitely got some my eyes on. And I think the Pixel stuff, if you staked Ronin, you actually got an airdrop of the Pixels token, which ended up doing relatively well back in, I think it was like February, March. So I think Ronin is something that's an ecosystem that I've definitely got one eye on. And I think coming into the bull market, it could be super interesting. And projects like Forgotten Runes are probably going to do relatively well off the back of that, if you get that influx of players onto that particular protocol.
Yeah, talking about layer twos, if you look at something like Ronin, which is an L2 that's like obviously heavily focused on gaming, and then you look at Abstract, which tries to be and become a general purpose L2 and not the only one, but the biggest one at doing that. What positioning, like market wise, consulting wise, do you find to be more interesting? Try to be that everything L2 basically that just tries to scale and attract as many people as possible, or picking out a niche and focus on gaming or on whatever else you want to focus on. You're still mute.
I think you have to focus on a niche. I think that the market's going to get too competitive to be like a jack of all trades. I mean, there will be L2s that kind of have a lot of TVL and they probably have a lot of activity on there. Like you look at Arbitrum, I think that's kind of like the market leader at the moment in terms of L2s and TVL. But that's very much known as like a DeFi chain. But you've got Base, which I think is more a consumer side of things. You've got meme coins. You've got some games that have come to market. People have bridged over there. You've got Blast, which is kind of seen as, I mean, it's got that casino branding to an extent, but there are real innovation that's happening with the RWAs, with gaming. So I don't know, like I think they're all trying to find their footing. And I think Abstract, I mean, that's acquired by Pudgy. So it'd be interesting to see what they do with this consumer crypto stuff. Whether it is just appealing to the likes of like the Pudgy stuff. And then if they offer that as a service to other NFT projects to roll out similar things, whether it's experiences and things for their collections, that'd be super interesting. And that would then drive real revenues back to the Pudgy ecosystem. Yeah, I think there's a load of different use cases that you can have for L2s, but I do think that you need to focus on the niche, because if you don't, then I think there's going to be other L2s that do that particular thing better than you will. But yeah, I'd be keen to hear your thoughts as well, Legendary.
I agree with most of what you've been saying. I think the only thing where I would add a bit more is on like the particular niche, if it makes sense or not for that to be a niche. I think gaming is a valid position. But I've recently been on a call with an L2 that tries to position itself as an RWA L2, and they say they're like very, very capable to do RWAs as opposed to other blockchains or other L2s. Like, why? Like, what's the technical specifics that make you say that? And there wasn't like a really good answer to that. So like if you position yourself, and I don't know if it's gaming and you have high transaction throughput, or you have a significant network of gaming studios, you have a flagship game that you think might attract other users, you have a game distribution platform to the likes of Steam or Epic Games, then it makes sense. But I feel like as soon as this becomes, oh yeah, we will just focus on whatever it is, but we don't actually have any advantage there, then it becomes kind of weird to have this niche focus.
And I think it's all good and well having a good product that does well in that particular niche, but I think distribution is far more important. So if you have, because I think there is a risk that you have a big traditional company coming into the space and building their own chain for that specific sector, and all of a sudden they just on-ramp all their users to that particular L2, and they just take all the market share. So I think there is that risk from a strategic standpoint that, yeah, I don't know. I look at, who was it? I can't remember which chain it was, but there are chains that, I mean, Onyx chain with JP Morgan, as an example. I mean, tokenizing securities and putting those on chain is effectively a form of RWA to an extent. And that's all their own proprietary chain. So like, you're going to have more of that. I think Goldman Sachs has talked about recently about doing 3 tokenization initiatives. And I suspect that probably won't be on ETH. It'll be on their own proprietary chain from a security and privacy standpoint. And I think we'll probably see more of that with these traditional Web2 brands, whether it's like eBay or some of these other ones that kind of come into the space and like, you know what, it makes more sense to capture that value for ourselves than go on an L2 and give them the transaction gas fees and all this kind of stuff. So
yeah, that's a very good point that I didn't think about. And I think it will, then I want to go to Oxy. Then I think it's also interesting from basically the mother chain perspective. Will they use the ZK tech stack? Will they use OP to do that? And how that will basically reflect back to the mother chain. I feel like Polygon is a good example for having insane business development, insane partnerships, but still constantly being flooded on the timeline, and building the CDK, the chain development kit, having that scale on top of Ronin. And when that news hit, and we spoke about it on the show, I feel like it was mainly celebrated as a win for Ronin, and nobody like talked about the win that it also is for Polygon. So that will be interesting to see if some of that value goes back to the mother chain that supports all of that.
Yeah, and I think with Polygon, it's not just Ronin. You've got, I think Kanto has plugged in. I think you've got Palm Network, which for those that were OG collectors in 2021, you got the Currency by Damien Hirst, which was on, I think it was Henny, which was on Palm Network. So that's kind of plugged into Polygon now. So there's actually a lot of innovation that's happening that doesn't necessarily get the coverage. And I completely agree with you that there are L2s that are having that value proposition that probably, I mean, Optimism is a decent example of all the activity on Base and those fees getting sent back to Optimism. Like, they're making a huge cut from that. So I think those that create these L2s early on and then they're kind of used later on, I think they do get that revenue share, and it's super interesting to see that and how they capture that value.
Yeah, that's a very fair point. Oxy, I see you with your hand up. Definitely want to go to you and hear your thoughts on the little L2 discussion that we've been having.
Yeah, thanks for having me. Can you guys hear me okay? I was getting rugged earlier.
Absolutely. Audio is great.
Okay. Oh, awesome. Love it. So I've been reading up on like Optimism a little bit more. And like the Optimism super chain is one thing that's really interesting to me. And I guess based on my understanding, it's, combining a bunch of different chains together so that they can work interoperably together. So like Base or OP mainnet, all these different, side L2 chains, and understanding they're under the same Optimism protocol. I guess down the line, do you see a world where it doesn't really matter what chain you're on? I guess speaking specifically to ETH, like I know, Sam, you're talking about chains that are specific to like private chains that are specific to certain companies. But I guess if this tech, I guess, continues to develop over the years, is there a world where maybe it doesn't necessarily matter what chain you're on if they interop, like if they work together so seamlessly? It's just interesting, like, concept to me that's even a possibility. I guess I'd never even thought that would be a possibility to work seamlessly together.
I think, well, I was going to say that, I mean, there's the AG layer, so Polygon AG layer, which kind of is trying to break out of that fragmented liquidity. I think there's, what was the other one? Yeah, so Particle Foundation recently that I noticed, they're effectively creating, well, they're abstracting that idea of having to be on a specific chain. I think they're partnered with, so Say Network, they announced recently, they partnered with Berachain. So I think there will be platforms that effectively become user-friendly, where like retail user-friendly, where the retail user only really sees the interface for that particular like platform, so like Particle Foundation, and then behind the scenes you have those L2s that plug in, and however, whatever that user then wants to do on the blockchain, they might not even have to know that they're on the blockchain, but they can then just interact with the Particle Foundation interface, and then it all happens under the scenes or behind the scenes with whatever L2 that meets that user's needs. So I think that definitely will happen. But I do think we're a little bit far away from that becoming seamless. I think probably at least another couple of years, probably. I can't see, I mean, we talk about Coinbase onboarding everyone from their centralized exchange business to Base. The user wallet's pretty good, but it's actually getting them to use that. And I think that might take some time.
Yeah, very much agree with that. I think we'll definitely get to the point, but we are a far way out to make it seamless. Like, making it work is one thing, but making it work that as a user you don't notice what's actually going on is a different kind of beast. Let's maybe get into the first news. Wanted to touch quickly on the BTC selling. Actually want to lead that into a bit of a different discussion. Have a post by G Money, which I found to be very interesting, ready, but quickly setting it up. Germany selling up to another 2,700 BTC, which they have moved to the exchanges that they typically have just used in the past to sell their BTC. And if we have a look, I think there's not a lot to say on that other than the number. If we have a look at Arkham Intelligence, their wallet is down to 6.1k BTC. equaling a value of $350 million. So they should be very soon done with selling off their Bitcoin. However, what I found very interesting in conjunction with that, and I would like to hear your thoughts on that, Sammy, was a post by G Money, the pretty well-known trader and founder of 9DCC, having a long post on what he thinks is going on with the timing of the Bitcoin selling. And just going to go through parts of it so that we have the relevant context, saying that before he got into crypto, he was a gold and silver bug. The thesis was the same: as governments around the world printed more dollars to keep the promises older generations made themselves on the backs of their grandchildren, one would need to hold onto precious metals as a hedge against that risk. Then he goes on to say that the money printing has become more and more extreme. The original program to save the entire financial system in 2008, for example, was 700 billion. In 2023. Just the bailout of the Silicon Valley Bank of SVB was 175 billion just to save one regional bank. And he goes on to make the argument that because of that, central banks around the world have a non-financial interest in keeping the prices of precious metals as low as possible. For decades, the industry has been plagued with rumors of naked short selling of future contracts that are more than the ounces held in custodian banks, as well as rampant price manipulation. He says to look at the JP Morgan precious metals fraud case, where the company admitted to committing fraud and paid a $920 million fine. And then he goes on to make the point, and that will connect us to the Bitcoin news in a second, that one of the tactics that he has seen throughout his trading career was the illiquid smashing of bids during low volume hours, overnight sessions when liquidity is low, and not just small sales, large sales, just to move the market way stronger than selling it during typical trading activity to make sure that the chart is devastated. And his key point is to say that no financially motivated seller would ever rationally sell like this. They would literally be lighting money on fire just to drive down the price when they could have waited a few hours and had much less market impact. Connecting that to Bitcoin, the German selling on the 4th of July, along with Mt. Gox beginning to return Bitcoin, held on to the same day strikes. Him is very much the same tactic, using periods of low liquidity to smash the market, decimate anyone using leverage during the time frame. And to him, it was disheartening that these old tactics have been used. And he concludes by saying that the interesting difference between Bitcoin and gold is that supply is much more transparent. The supply of Bitcoin, that is, we know exactly how much is being produced and transferred at any given moment. And he hopes that this transparency makes it much harder to create naked short positions and manipulate the price of Bitcoin, because we can monitor it much closer in real time. So basically, the key point is to say that if you're printing more and more fiat money, you're printing more and more dollars, and you obviously want for the dollar to be a strong currency and look strong, people will keep benchmarking that against gold, will benchmark that against Bitcoin. And if your interest is to make the dollar look strong, then you at the same time don't want a high Bitcoin price or don't want a high gold price. And for that, you would be more likely to sell your gold or sell your Bitcoin in the case of Germany in a fashion that's not maximizing your return as a seller, but is maximizing the negative impact on the market. Quite curious to hear your thoughts on that, Sammy, whether you think that's something that could be happening, or is it something that you would say is more of a conspiracy?
I'm kind of in the camp that, I mean, they don't want to lose power. Like any government doesn't want to lose power, and I think that's a huge thing. So to lose monetary power through their fiat currency is a huge threat, and I don't think they're necessarily prepared for that. So I do agree with what G Money is saying to an extent. It just seems like too much of a coincidence to slam that on the 4th of July, knowing low liquidity. And I trust what he's saying about the low liquidity stuff. I mean, I'm not a trader. I did work in TradFi, but he probably has better visibility as to strategies and tactics to try and drive the price down from a trading standpoint. And it's definitely something that market makers or big institutions can do. So it does make sense from that standpoint. I don't even know whether it's conspiracy. I think it's just like, it's an unregulated market. They can do it if they want to. They have holdings, but also I think the Bitcoin that they seized is is from illicit activities, I think. So they could effectively sell it and it does hit the bottom line. So you have to look at what the government's time horizon is as well. Because if they're short term, so which most are, I think most tenures are around about 4 years. I don't know specifically about the German political system. I think you'd probably be better across that. But assuming it's the same as the British, you have terms of about 4 years. So you obviously want to perform well from a financial standpoint. So if they sold their Bitcoin at reasonable prices now, then that's going to hit their government country's balance sheet or P&L in a positive way. So it probably looks positive towards them. So I think that ultimately, yeah, potentially it could be. It's speculation at this point, but I do think that there is that possibility that it could have been done. And also it's interesting because I think the political stance in the US is very different to that of Germany. I think that it seems to be shifting. I don't know if it's just pure politics, but it does seem to be genuinely shifting. You've got institutions coming in advocating for Bitcoin. And I think probably some nations are losing power at a faster rate than they would like to, because they potentially don't have the infrastructure and tools. You've got to remember that these institutions probably don't have the funding to move at the same pace as some of these private sector businesses. So I think there is delay tactics to an extent. But yeah, I'd be keen to understand whether you're on the same viewpoint or whether you have a differing view from the conspiracy theory standpoint.
Yeah, I have a couple of thoughts on that. Just also looking at the same time through the YouTube comments, Tiro saying that governments should not pick winners and losers. Kashmir saying it's free money for them. They seized most of it in 2013. USA also has free BTC from Silk Road. They will dump too. I very much agree with you on the part that governments, want to have control of their policies, of whatever they think is important to the influence and power that they have. And I do think that some of those things happen at very weird timings, or something like, remember, there it is, the ECB, the European Central Bank, coming out with a block on the 30th of November 2022, talking about Bitcoin's last stand and saying after FTX and everything that happened, Bitcoin has peaked at 69K November 2021, falling to 17K. And then FTX basically went bust, sent the Bitcoin price well below 16K. And to go on to say Bitcoin is rarely used for legal transactions, it won't go anywhere, et cetera, et cetera, et cetera. And if you then look at a chart, I'm sharing this on screen for the people watching, like this bottom, this perfect cycle bottom is exactly when that article came out. So to them, Bitcoin was, at its weakest spot in this cycle. They certainly wanted to have an article. They certainly don't like Bitcoin as much as we do, to make it look even weaker and hopefully send the price down. Quite the opposite happened. Ever since this article has been published, BTC did more than a 4x on that over the last 2 years. So in terms of the selling, I don't know to the extent that like we can say that about Germany, because I just think it's not enough Bitcoin to crash the market. And even when you have players like Justin Sun posting, doesn't matter if he did it, would do it, didn't want to do it, was farming engagement on cloud, but posting that, hey, I'm willing to buy all of Germany's Bitcoin. And as someone who has the financial capacity to do that, that's the relevant part, to make it, quote unquote, a credible threat, right? This is the credible threat aspect. It's something that in game theory is very, very important for a threat.
Just on that point, I think so the signaling, so what Justin Sun did there, it's a tactic called signaling, and that's signaling to the market that don't worry, it's trying to drive that confidence back into the market. And we've seen it on a micro scale with, I think it was David Choi, the MetaStreet founder, with the Pudgies. He put a backstop of a couple of million, but that's not going to stop those liquidations from Blur at that point in time. But he signaled to the market and restored that confidence. And I think we've got people like Justin Sun who have done that as well. And it's a typical tactic. And I think obviously Germany's doing a similar thing, like they're doing that counter signaling. But I think just to that point that you made around them writing that article at the PK bottom, or at the bottom post the last crash, does that mean that this is the PK bottom for Bitcoin. It's going to go absolutely crazy, given that they've just effectively done the same thing, but from a signaling standpoint.
I mean, it's interesting because it's something that you see more and more on the timeline, and not only on the timeline, but also looking at charts. Stocks are doing incredibly well right now, and crypto is just not tracking that because it's being like kind of held back by that Mount Gox Germany selling pressure. So I don't know. If anything, this would be a good time, or after the summer would be a good time for crypto to run. But I still think we have like many more relevant events this year, like the election, obviously, like the Ethereum ETF, and also with the Ethereum ETF, there's not only bullish news on that. There's also a bit of FUD. I think we had the Andrew Kang post that we discussed. You have found something quite interesting that we will get to a bit later in the show. So
just in the comments actually. So Kashmir, he made a comment around Mr. 100 all still bidding. So actually, after the German government started dumping their Bitcoin, and I started looking into the amounts of some of these wallets that they held. And Mr. 100 that he's referring to is a top 10 a non-Bitcoin wallet. And he's saying that he's bidding. And there's a few others. I think there's Mr. 5000 who started buying, I think it was this year, but he started buying in 5,000 Bitcoin chunks. And I think that's more interesting to me because these guys have significant wealth. They're anonymous, but they're bidding. And I wonder if some of those might be government. So you see them dumping on the timeline, but they're also accumulating. Or you might have other institutions or a lot of stuff that we're not aware of that doesn't hit the timeline, that probably doesn't get the coverage. And I think that to me is pretty bullish. Actually, maybe I'll do a post later today showing that just in terms of a chart format, because I think that'll be interesting for people to understand. Like we hear about all this, like Mount Gox has got 100 and something K Bitcoin to dump. You've got Germany dumping their Bitcoin, but there's also other significant holders that are buying. Yeah.
I think this info is so much more relevant in terms of Bitcoin than the TA that we see on the timeline all the time of people drawing lines on the chart and saying this is going to be the future, because I think what we forget is still how small Bitcoin is as a market and how little it takes to move it up or down. Like relatively speaking, to moving the stock market up or down, that takes significantly much more money. I think we saw a couple billion inflows in one ETF in the Bitcoin in the Bitcoin ETFs, and that has pumped the price. And Bitcoin is still at a level where either extremely wealthy individuals or governments, because we talked about control previously from the standpoint of maybe Germany or the standpoint of US, but in a similar fashion, you have governments who are dependent depending on the US dollar, and maybe they want to reduce that dependency and are looking into something like BTC, which is happening around the world. So I think those events and those either institutional or individual wealthy players have much more effect on the price and trajectory on Bitcoin, at least in the short term, than we give them credit for on the timeline.
Definitely agree. Do you want to get into the ETH ETF stuff?
Yeah, let's actually do that and hold back the last news for a bit. I think this will be a rather short one to touch on. Staked ETH, as we said in the beginning, is close to all-time high as the ETF approval for ETH is getting very, very close. The total number of staked ETH has continued to increase and is currently sitting at 33.3 million ETH, or 27.7% of its total supply, says Julie Moreno, the CryptoQuant's head of research, in a note that he has shared on the CoinDesk article that we are sharing right now. If we take a quick look, where is it? On Polymarket, on the bet, it's a rather small one, admittedly, that the Ethereum ETF, whether that will begin trading by July 26th or not. It's an 87% chance on that we see. But again, it's a very small bet with 23K US dollars volume in it. And also an interesting tweet in conjunction with that is been written by DeFi Investor saying spot Ethereum ETFs will unlock $9 billion worth of ETH. These are funds that Grayscale holds in its Ethereum trust the ETH ETF's launch is bullish in the mid to long term, but may cause some short-term selling pressure. Sammy, since you found that tweet and shared it with me, I'm curious to see if you have any additional thoughts on it.
To be honest, it's probably just going to be ins and outs. Like I think we'll probably see a similar sort of amount of inflows and outflows as the Bitcoin ETF. And I think that's probably a pretty good proxy in terms of demand, assuming that the institutions have a similar amount of demand for the tech alternative to the digital gold. So I think that, yeah, we'll see those outflows over time, but I don't think Grayscale's going to dump ETH at current prices. Investors wouldn't do that. So those that have those assets under management with Grayscale aren't going to be like, you know what, I'm just going to market dump the ETH to get into another ETF immediately. I think it's just going to be, it'll just be ins and outs. You'll probably, I mean, that's the point. You'll probably end up seeing outflows from the Grayscale ETF, but it will probably go straight into the other ETH ETFs as they go live, probably from a fee perspective. So what we saw with the Bitcoin stuff is the fees for some of these new ETFs were actually lower compared to Grayscale and a few of these other ones. So it was more appetizing for an investor to come out of there and then go into some of these other ETFs. And I think if people have already gone into ETH trusts, then they're bullish ETH, so they're probably going to want to hold ETH or go into the ETFs as well. So
yeah, I agree with that. And the counterpoint basically to the post that we shared before would be this post by Tom Dunleavy, who is a partner at MV Capital, saying that 40% of Ethereum supply is locked, 28% is staked, 12% is either in smart contracts or bridges. And if you add all those numbers up, they add up to 80%, which means only 20% are quote unquote free floating. And the point is that in his opinion, ETH ETF flows will be able to move the price of ETH rapidly because so much is locked up or is being put to use somewhere and only so little is freely available. Sammy, any final reflections on that before we move on to the next piece of news?
No, I think that makes sense. Definitely something to watch in terms of the amount of ETH on exchanges. But I don't know, I think there's a lot of, when we see ETH go to exchanges, we automatically assume that it's about to be sold, which I guess in some instances it probably is, because that's where you have a lot of the liquidity for some of these big institutions to dump into. But we also have strategies where people will put stuff on exchanges to try and suggest that they're going to dump the ETH, and then they take it off to kind of enable them to buy more. So there's definitely tactics to that. So yeah, it's an indicator, but I wouldn't rely on that also.
Yeah, no, that's a very fair point. Let's maybe move to the Web3 roundup quickly before we will touch on the last piece of news. Again, apologies for not having a snapshot today, but we still want to bring the rest of the news to you. So I'm just gonna share them on screen. Since we talked about Polymarket in conjunction with the ETF, the ETH ETF approval, another and way larger bet on Polymarket is obviously around the presidential election, and it is to the question who will be the Democratic nominee 2024. Has now risen to be $106 million bet, and Biden is leading that. He wasn't in the first spot, but after the press conference that he gave yesterday, he's now on top of the board again with a 44% chance to be the Democratic nominee this year, followed by Vice President Harris. So that was interesting to see that even at a bet size this big, we still see those shifts in the leaderboard. 45% now, it's still ticking up as we are sharing it on the screen. I like that. And what's also interesting to me, and it's something that we touched on the show multiple times, is the prediction markets itself. Not only that, you have people like Pac-Man who try to get prediction markets coming to Blast, but that you see them mentioned more and more and more in mainstream media, referencing Polymarket and referencing what the prediction markets think. So I think that's a pretty cool development. In terms of the second piece of news, we have OKX, the second largest exchange, which we talked about when we touched on Mika and USDC to be the first Mika regulated stablecoin. USDC chose, or Circle chose France as its headquarter for its Europe operations. OKX actually wanted to do the same, but last minute they moved to Malta. Compliance in Malta, quoting from the article on finance.yahoo, is way more lenient, and that's not the tag you want to have when you're in crypto and trying to make it in the EU. I think OKX already has some business in Malta. A lot of the Web3 gaming companies are also in Malta. And I do remember there was this case where they had to when they ended up having to pay millions and millions in fines because they were not complying with a crypto-specific regulation, but they still choose to basically operate under this in this environment. So this will be interesting to see how basically the Mika will impact the EU as a place to do business as a crypto startup or a crypto company, and also where that business will move and what countries will ultimately within the EU manage to garner some of those companies who will need to have a headquarter in the EU as well. The third piece of news, Morgan Creek is to raise up to $500 million for a new Web3 venture capital fund. It's an interesting one because that will be also connecting us later on to our last piece of news, because it specifically is focused on Europe, Middle East, Africa, and Asia Pacific. So basically not having a focus on the United States. And apart from Web3, apart from blockchain technologies, also obviously wanting to focus on AI as well as chips and data. Then we touched on that before, Yatsu buying another 11 Mochaverses and moving not only up the price, but also increasing his collection up to 88 NFTs. And with that, also some positive price action on Mocha. Sammy, you had a post on that before the show went live. I think we talked about the token coming out at 6.5 cents yesterday, and throughout the show moving up to the 8 to 9 cent range. And we are, at least when you had shared that, I don't have a chart open live now, we are above 11 cents, which means we are above $1 billion in FTV. Quickly checking in with you if you have any additional thoughts on the Mocha price action.
Yeah, to be honest, I'm actually surprised that the Mocha NFT has bounced so much. I think we saw it go down to 1.1. So the fact that dip has been eaten up, and anyone who bought that dip at the lows is now almost up 2x. It just shows I don't know, like there's obviously a bullish community behind Mochaverse, and I think rightly so. If you've got a huge Web3 venture fund that has lofty plans to kind of build out their portfolio companies and potentially IPO, then I think that anyone who holds the Mocha token is probably going to benefit from those network effects. So yeah, I mean, it's bullish. I think it's severely undervalued. I think they've launched at a very compressed time in the market. So yeah, I mean, it's up to 12.5 cents now. So yeah, it's almost 2x off the lows, which is pretty wild, given it's only been 24 hours. Especially when we've seen many other post TGE tokens absolutely dump straight after. And also, if you look at the wider market, like Bitcoin's sliding still, so it seems to be defying gravity at the moment. So yeah, it's pretty bullish.
Yeah, that strength against the wider market is truly outstanding. And do you remember what I told you after the show yesterday on our little post-show call?
Well, you sent me a video of what a consultant is.
Yeah, that too. But I also told you that I don't want to buy the PFPs for tax reasons. I'd rather buy the token, and I actually want to buy the token. And in typical manner and fashion, I said, this is Tio in the comments is saying, he said he loved you, Sammy. This is a thing for the weekend. So I did obviously not buy the token, wanted to move with a bit through the weekend, and missed that nice, not 40% for me, but like at least a 28% move up by postponing my decisions again.
No, I literally just staked all mine. Yeah, I thought it was pretty undervalued. So I also think that I don't think I really have any intention to sell it, because I think the benefits that you'll accrue from the ecosystem will far outweigh the price of the token anyway. So yeah, I'm bullish long term. But just on that Malta stuff, like I think, have you heard the phrase blockchain island?
Mm-mm.
So Malta is known as blockchain island. So it's like it's so pro blockchain that it's got such a strong community there, that that's the name it's given. So it's unsurprising that OKX has moved to blockchain island, or they're getting more exposure there. And I'm intrigued to see how the 1KX exchange or blockchain that they're launching is going to develop, as well as the wallet.
Yeah, Malta also has been pretty friendly when it comes to gambling, both for gambling companies as well for gambling content creators. I remember that some of the biggest gambling content creators in Germany, who are also game streamers, and Germany has like very specific regulations on that, where you are not allowed to advertise gambling. Also, if you, I don't know, play Call of Duty, you can't stream that throughout the day. It has to be streamed during the night hours, I think between 10 p.m. and 6 a.m. or something like that, because it's, not suitable for kids to be streamed. And if you reach a certain size, you're also subject to similar fees that a TV station actually has to pay. That became so absurd that some streamers, who, again, either did very, very big numbers in gaming, or both gaming and gambling, decided to move to Malta. But I also think that the pressure on Malta is increasing, just because that MiCA framework is EU-wide and they have to implement it. And there are just some minimum standards that they have to fulfill. So like, even if they want to be more lenient, they only can do that to a smaller and smaller extent.
I think as well, just on that gambling point, I know we're deviating a little bit, but that's why a lot of people end up moving to Kick from Twitch, and how, because Kick is actually a subsidiary of Stake.com. So there's it's fully owned. So like a lot of gambling content is streamed on Kick, which then kind of flows up to suggest, or they're effectively trying to get people hooked on gambling, so that then they come to Stake.com. But yeah, it'd be interesting to see where their jurisdiction is, because I suspect Malta might be in the mixer for that.
Oh no, Stake is regulated in Curacao, the Caribbean island. I don't know about Kick though, but I didn't know they're a subsidiary. Maybe one last point, since we're on this content discussion, then we will use the last minutes to touch on the crypto report and study. A thread guy had this post saying it's kind of insane you can't post Andrew Tate on TikTok. Any frame with his face is instantly censored and removed due to community guideline violations. No explanation whatsoever. X is our last hope. Because obviously apparently he tried to upload clips from his podcast to TikTok, but couldn't do so. And TikTok seems like they're using basically an AI filter to remove content that they do not want to have on that. And it's interesting because like, I feel like we like to say in the comment section was mostly, oh, but free speech and we have the right to free speech. But on the other hand, TikTok is not a government. TikTok is, it's a company that's very close to a specific government, but it's a company that has the liberty to decide who they want to platform or not. And similarly, how I feel like you can't force ThreadGuy to do an interview with a specific person. You can't also, you can neither force TikTok to platform a person that they just don't want to have there, because they are a very profitable business and maybe thinking about the ad revenue and thinking that this is not something they want to show on the platform. But yeah, just as an interesting side note,
even though they're not a government, they are subject to local jurisdiction rules. So whatever the government that they're kind of closest to, or the jurisdiction they're in, they'll have to comply with that. And if there's certain restrictions around certain specific content, then they have a decision whether they comply with that or not. But then there'll be hefty fines if they don't. So I think there is that. They do have a freedom to an extent, but then there is ultimately the repercussions if that decision is made to air it. But I don't know the specific reasons as to why Andrew Tate is blocked from platforms, but I mean, I know his content roughly, but it does seem a little bit extreme to have that when it's another content creator doing something about him. That does seem like censorship.
I don't know. I think it's just terrible for ad revenue. I think if you are, say, a brand like Ben & Jerry's and you want to advertise on TikTok, you don't want to do that on a Tate video, and if someone clips that, it could cause like a PR shitstorm for you. And I think it's just purely coming from that perspective. But anyhow, we only have 5 minutes left, so let's take a quick look at this study, at the Crypto Trading Report 2024 that was shared on CoinWire. What they did is they have looked at 136 countries, estimated the crypto trading volume of each country using 4 critical factors: web traffic, website language, headquarter locations, and trading time zone, and kind of tried to identify the players in crypto in terms of countries. And there were some interesting takeaways. I'm going to read through to a couple of them. Global cryptocurrency trading volume in 2024 is estimated to exceed 108 trillion. That's nearly 90% higher than in 2022. The country with the highest trading volume, dollar-wise, is the United States in 2024, surpassing $2 trillion in trading volume. If you look just at the transactions, it's actually Europe that's leading in that regard, with 37.32% volume of the global transaction volume. Binance is still holding the top spot as the most widely used crypto exchange, dominating in 100 out of those 136 countries that they took a look at. And also Turkey and India ranking second and third globally, with both countries boasting trading volumes exceeding $1 trillion. And then there was another interesting bit further down on the bottom. Saying that Russia is leading in Europe in cryptocurrency trading, and also in the top 5 globally, with a volume north of $633 billion. And the UK being a close second with $624 billion in trading volume, second largest market in Europe, 6th worldwide. And putting London there as the highest crypto-ready city, that I found to be pretty interesting in that. But I wouldn't have guessed that the Russian Federation has a higher trading volume in US dollars than the United Kingdom. Obviously, what's different, and I'm going to pause there for a second, is the trading volume per internet user. Russian trading volume per user is $366 on average. For the United Kingdom, that figure is at $770. And especially if you compare that, that's an interesting one. Compare that against the monthly wage. For Russians, that's 63.5%. For the UK, that's 26.5%. I mean, obviously, one of the explanations that would come to mind is are all the repercussions from Russia's invasion into Ukraine that have limited a lot of the transaction freedom that people used to have in Russia, and by that increasing the need to use cryptocurrencies. But as I said, I'm going to pause there. I'm going to go to you, Sammy, to see if you have any reflections on that study or any additional thoughts on it.
Yeah, I think just looking at the stats, so if you just bring the stats back up, the one that stood out to me was Slovenia. Now, I don't know what connection. I mean, I've been to Bratislava, and it does, I mean, the architecture is very kind of Eastern, like Russia kind of vibe. So I do wonder whether they're connected to an extent, but that one stuck out to me as being quite, so if you go down, scroll down, so just on the trading volume per average monthly wage, like that's significantly higher than a lot of them apart from Ukraine, so 193%. And I don't know, I'm just surprised by that, because when I was there in Bratislava, it didn't strike me as that crypto, like I wasn't aware of it being that crypto friendly, or a lot of people being aware of what crypto was. So that strikes me as quite interesting. The other one that stood out to me was Turkey. So if you scroll back up, it made reference to Turkey at the top. I think it's in terms of like the amount of volume. It's on number 4. That struck me as quite an interesting point as well. Like I kind of get the Russian standpoint, the Ukrainian standpoint, because it is an alternate form of transferring value, especially with sanctions. But Turkey struck me as being quite interesting because I didn't realize they were that big into crypto as well.
Yeah, that's a very fair point. I would make the argument for Turkey, the hyperinflation, the very high rate of inflation that we're seeing there, that ultimately also pressures people into doing business in stable coins. I think we talked about Argentina on the show, and how basically a lot of the grocery stores, smaller stores, etc., are taking Tron, or taking stable coins on Tron. And we had Pancake Bra Weathers, who also said that he lived in Argentina for a while, and stable coins were part of his daily life in buying stuff. In terms of Slovenia, the only thing I know, and this will be our final point on the show, because unfortunately we are at time, is that they have pretty crypto-friendly regulation when it comes to taxes. They are not only pretty straightforward with a flat tax on everything. I think capital gains, income, crypto, everything is flat taxed at 25%. But depending on the holding period or the holding duration of your crypto, that tax, so basically long-term capital gain tax, then goes down to under 10%. And I also think that some of this crypto-related stuff is not directly taxable. So I don't know much about like the tech infrastructure, but I know that tax-wise, it's a pretty crypto-friendly location to be in.
It sounds like you've been sussing it out as a potential place to live.
Yeah, I mean, I have. It's super close to Vienna, right? It's basically you can take a boat and be there in 40-ish minutes. There's even no point in flying there, because it's just a 25-minute flight. So taking a train or a boat takes you there in less than 1 hour. And it's pretty similar to Vienna. Like, I don't know a lot of people who work in Vienna but move to Bratislava just because it's a similar vibe, like architecturally speaking, but a cheaper version of Vienna is how they then reference it.
No, I've done that trip, the train trip from Bratislava to Vienna. It's I found it quite a contrasting difference, but yeah, I guess we're just over time. So
yeah, I feel like if you save money, you will shift that perspective and have a bit more copium in it, and just call it, it's basically the same as Vienna, even if it isn't that close to it. But again, it's a beautiful city, so I've been there multiple times. Anyhow, this has been our show for the day. Thank you so much, Sammy, for hosting with me. Thank you to Oxy and Tiro for joining us on stage today. Thank you to everyone in the YouTube comments, being again crazy. We had lots of comments from Kashmir, from Tiro, from Oxy. And we will be back on Monday, as per usual, at 7 a.m. Eastern Time. In the meantime, I wish you all a wonderful weekend. And for those who watch the football/soccer finale, enjoy the game on Sunday. I think it's Sunday, not Saturday. All right. Take care, guys.
Really been going back to back to back to back to back.